Obviously, it's a conviction buy for you still. I mean, I guess my question is, even after today, when we're seeing the yen at 144 and change, and we've had a nice run up, almost 25% for the Nikkei 225 this year.
Yeah, the fact is that we think that with normalization of interest rates and yield curves within Japan, we think that this is actually going to be a positive for Japan. The fact is that if the BOJ is actually doing this or is actually contemplating doing this, that means that, inflation and slight rise in inflation is sustainable. The fact potentially is, in their views, that maybe the economy, despite what we saw in terms of the GDP reading today, that it is on a gradual path of, modest growth in Japan. That should bring positives to Japanese corporates. From our point of view, we feel that, with Japanese corporates seeing a normalization of interest rates, potentially you might see them increase overall capital expenditures. We could potentially continue to see further wage growth, and then also at the same time seeing improvements in overall EPS growth as well for Japan, which is what a lot of investors are looking for. So that's why even in 2024, we still do see a lot of positives going. And in particular, if a lot of the Japanese corporates continue to do their share buybacks, improve on overall corporate governance, increasing dividend payouts, these will continue to be benefits for Japanese investors.
Explain why an exit from negative interest rate policy would be helpful to corporates.
It's more of a sentiment. It's more specifically, when interest rates are a bit more normalized. And the fact is, you have to remember that a lot of Japanese corporates' balance sheets are very strong. The fact is that, while interest rates are normalizing, it's more of a sentiment. It's more signs that there's an overall structural improvement within the Japanese economy, which would actually enable for a lot of Japanese companies really to increase capital expenditures. And that's really where we see the benefits are actually taking place when it comes to normalizing interest rates.
Well, I want to move to India as well, because India is another one of your conviction picks, or has been. Are these staying conviction picks for the year into 2024? And obviously we've seen, not quite the same run up in India, up 15%, but we've had those regional elections now, looking like it could be good for Modi. Would that make you more bullish on India, at least stocks-wise?
Yeah, we remain bullish. The fact is that, look, like what you mentioned earlier, that, this week we saw, fairly nice gains within the Indian equity markets, with the regional elections. We've got, the main elections coming up next quarter. And so specifically, that should actually have a continued boost, because the fact is that all expectations are still for Modi to continue to be prime minister again. But more importantly, what we're seeing on the ground, in particular within India, is that when you look at some of the structural changes, when you look at some of the positives around, whether it be the financials, whether it be increased sentiment towards real estate, there's a lot to really focus on when it comes to Indian equities. Yes, the fact is that valuations continue to be, quite extensive and quite expensive when you look at Indian equity markets. But when you factor in the fact that overall economic growth remains strong, EPS growth remains strong, and more importantly, domestic investor sentiment and their overall allocations and investments back into the Indian equity markets, especially over the past couple of years, signals that you have a very strong domestic investor base who will continue to invest in the Indian stock market, regardless of whether or not you have foreign investors coming in or not.
Now, just to mention that in Asia, Vietnam is your third conviction pick. But I wanted to ask, going into this year, we didn't necessarily see what was coming, right? And I wonder if investors are a little now, wanting to see returns immediately, and if they don't see them, they'll head for the exits. That happened in China several times this year, and obviously, the China story didn't quite play out. Are you as pessimistic on China for 2024? And what about this question of investors being sort of now or never?
No, the thing is that with China, we remain to be cautiously optimistic. We have a neutral position right now in China. More importantly, it's about this overall sentiment and whether or not we can continue to see, further policy support. Right now, because of uncertainty around how policy support potentially could affect specific sectors, we think that bottom-up stock picking is actually going to be much more important in 2024 when it comes to trying to outperform within the China market. And like what you mentioned with Vietnam, the one thing we want to consider consider potentially is if they could come up for maybe inclusion into emerging markets, not maybe next year, but maybe in 2025, we tend to see run-ups in the stock market when there are specific frontier markets that are potentially in consideration for a move up into emerging markets. So, these are specifically some of the, strategies and some of the areas we're looking for opportunities in 2024.